The UK is back in focus this week. First, we begin with the jobs data, then it's inflation. Good morning everyone and welcome back to Morning Markets. Well, last week was mostly a story of events across the Atlantic, with price pressure data for the month of September coming through US consumer CPI and also PPI. This is just a measure of industrial price pressures really for industry. Both measures came in a bit firmer than expected, which really points to the fact that inflation is likely to be sticky around 3% for now and isn't really going to decline there towards 2% as policymakers expect. So it doesn't really mean much in the short run, but it's something to keep an eye on for 2025. Now, events this week are dominated by what's going on in the UK, but we'd be remiss not to comment on some events in China over the weekend. Finance Minister Lan there has commented and updated markets on what they can expect with regards to stimulus to add some flesh to the bones for the policy measures they hinted at beginning in the month. Bear in mind, Chinese stock markets are up over 20% this month. So we're now at that stage where market participants are looking for some more evidence of what can be expected from government in the months and quarters ahead. There wasn't really that much new detail from the government. There were no figures given, no guidance on timetables, and no further embellishment of which particular sectors in the economy they're going to focus on. So markets have taken it okay for now, but it's not going to be too long before they are going to expect to be some real detail with regards to what particular parts of the economy are going to be the main focus, and also how much money is going to be directed at this target stimulus. So on to the UK. Well, we're in the weeks ahead of the budget, so this is the last major data round before Chancellor Reeves will update us all with the next round of spending commitments from the UK. So tomorrow begins with the jobs data. Now, markets are rather blasé about tomorrow. They expect no change in the unemployment rate, and they're also expecting a modest cooling in wages. Now, that's mostly due to a bonus effect from last year's NHS one-off pay awards dropping out. So the X bonus number, the more flat rate measure, is expected to decline only marginally. So we are seeing that incremental disinflation come through in the jobs and the wages data, and that's the focus tomorrow. But the main event will likely be the inflation data on Wednesday. Now, unusually, we're actually expected to see inflation dip again below 2%. So this will be the first time we've been below 2% since April 2021. And that's largely a result of the very low petrol prices we've seen over the last month. This is going to feed directly into the headline measure. So markets will probably focus more on core measures of inflation, particularly the services-based print. Now, both core and services again are expected to decline, but only really back to where they were at the middle of the summer. But again, disinflation does appear to be a trend that's durable. It's just very, very incremental in the UK. But this all builds up to what we can expect from the Labour government in just over 2 weeks. And the mood music again over the weekend is there's likely to be an even larger borrowing requirement. And this perhaps explains why we're seeing bond yields rise. That is, the implied cost of future borrowing from the government continues to inch up week on week. It's not just a phenomenon here in the UK, it's also something for the US. But this is really markets beginning to signal some observations that with inflation sticky around about 3% in the US mainly, and most governments not really targeting lower spending and maintaining borrowing, bond yields are beginning to look through and perhaps signal that they're willing to charge more for future borrowing. So it's something to bear in mind as we go into the end of the month. So that's all for today, but please join us tomorrow where we'll focus in on that wages and jobs data for the UK. Thank you.
This video is not a recommendation or personal financial advice. With investing, your capital is at risk. Investments can fluctuate in value and you may get back less than you invest.